Yo, what's up, everybody, and of course, welcome back to Zia Miles, your number one mentor. If you're new to my channel, please don't forget to subscribe. In today's video, guys, I'm going to show you how to grow yourself a small account like $20, $50 to 100 USD. So the most important thing that you have to know in this strategy is I'm going to teach you how to minimize your stop loss. Second thing is how to increase your win rate in this strategy, because this strategy will really help you increase your win rate. Then the third thing is how to master market structure so that you can be able to increase your win rate. Remember one thing that I told you guys, market structure is very important if you want to reduce your stop loss and of course increase your win rate. So keep watching the video and don't forget to subscribe, hit the notification bell so you miss most of my videos, and leave a comment what do you think about this video. Don't forget to share the video and don't forget to join my Telegram group. Check my description, join my Telegram group. So let's go straight away to the charts and I show you how to analyze and find possible entries and grow yourself a small account. See you guys there. Yo, so what's up, guys? Welcome back. So this is Zero USD, and I'm going to show you the strategy on how to grow yourself your small account. So let me tell you, the accuracy of this strategy is really high. That's what I can tell you. But of course, the first thing you need to first know is if you've never heard about BMS and SMS, I'm going to explain to you the best time frame you're going to be using it. And let me first show you small steps so that you understand what I'm talking about. You see, when we talk about BMS. BMS, let me show you some. BMS is all about structure. You first have to understand the structure of the market if you're going to be growing small accounts. Let's say this is a W pattern. You get that. This breakout here is called the BMS. You get that. It means break market structure. You understand that? Now let me show you. Sometimes you might be using candlesticks and you might not be able to spot this BMS. So let's go to small time frames. So let me show you using a line chart, because sometimes you can be able to use line chart and you spot them very well. You understand that? Now I hope you can see this line chart that I'm showing you here. You can be able to spot breakouts, BMS breakouts, strong breakouts, like these points here. Like these points there, you can be able to spot such breakouts, such breakouts. You understand that? You can be able to spot such breakouts and use them in the market. So that's just an example that I'm showing you. So let's keep going. So what I'm saying is let me talk about BMS and SMS. So when you call about BMS, it's all about break market structure. So this strategy is very important if you first understand the structure of the market. You understand? You have to first understand the structure of the markets, because market will always bounce from a particular point. Now let me give you one example. Let's say price has been moving up, okay? Then from now we have this, get that. So all these are highs, okay? All these are highs, swing highs, okay? Highs. Then this is a failed high, okay? So what you're going to be looking for is you're going to be looking for a failed high, okay? Failed high. This is a failed high because this high has not broken and closed above this point. It's a failed high, just like this point here. You can see this. It's a failed high, okay? And price had moved in a series of what? Like it has been consolidating just like that. So this is a failed high. So now, if this is a failed high, this point here, what is this point here? This point is our support, where price gets more strength to push it to the next high. So if price breaks this point here, then we call it BMS. You understand that? BMS, break market structure. Now, when break market structure happens, something has to happen. We either have a retest to the break market structure here, then price moves down, or we have a retest there to the source, but price retest the source. Let me tell you how you're going to be putting your entries, and we shall go to the chart and look for any example that can suit what I'm talking about, okay? So let me show you exactly. So the first thing that I'm talking about, let me first repeat this. So I was saying we have this, then we have a failed high, okay? A failed high, you understand that? Then a break of market structure. You get that? You're gonna be looking for that. Now, if this is a break of market structure, there's one thing that you're gonna be looking for. Let's say price comes back and makes a new low here. Okay, you look for the previous order block. What is an order block? Another block is the previous. If you don't know another block, make sure you watch my video. I'm gonna be leaving a video at the pinned comment, at the pinned I'm gonna be pinning a comment of how to draw order blocks, bearish order blocks and bullish order blocks. You understand that? Now, if you see this, you're going to be waiting for price to push back up to this OB order block, then price has to move down. Now, let me tell you how you're going to be taking entries, okay? Let's say you have $20, okay? You're going to be first taking some few entries from here, especially when you see a rejection candle. You take some, we're going to be looking at the charts exactly. You're going to be taking some few entries here. And when price comes again and breaks this previous low, let's say it comes back and breaks this previous low, you take more entries from here. You understand that? Now let's go straight away to the charts and let's look for them. Let me change it to that. Okay. Now I want you to look at this is Euro USD, this Euro USD, and you can either use any time frame that you feel like, okay, any time frame that you feel like. But I basically you can start from H1 to M30 to M15, as long as you're seeing only, as long as you've seen a breakout, a BMS or SMS. Okay, but let's first talk about a BMS. That's the most important thing first, okay, before we move on to SMS. Now, let me show you one example that I'm talking about. If you come to, this is Euro USD, and you can really see this. I want you to see this a low and this a low. You get that? Then this was a pullback. You understand? That's some. So if I'm to draw that, it's something like this, then like this, then a pullback. Now, remember, I made videos about you find so many structures in the market. You can find a structure which is like this, then you again find a structure which has an elongated that. You get that? There is a reason why it has this. Sometimes it's there, like either there were so many stops being hit. Let's say for you say that price is going to reverse from here, and you put your buys immediately here. Then here at least moves a bit to hit your stop loss before moving back. But now what we are focusing on is the structure of the market being broken here. You can see this here, it was being broken. You get that from here. Price was being broken from here. Now, when you see that, this is what you're going to be doing. So you realize this now, this is your BMS. You understand that? Because structure of the market has been broken from this. So let me now mark that point. I come and mark that point. Let me mark this point here, as in like, let me mark this point here. Now I've marked that point. Understand? I've marked that point. So what is this point? This point is a point of attachment where the structure of the market was being broken at that point. Even if you go to a line chart will be more like you can really see it more better. You get this? You can really see in a line chart more better. You understand that? You can really see it more better. You can see this. A nice breakout. Now let's go to H1. You can see in H1 it was also almost the same thing. You understand? But just that, you know, H1 it's a different time frame. Now if you look at M30, I don't know whether you can see M30 very well. If you look at M30, it's almost the same thing. You understand this? A break in the market structure. You understand this? Then you can see this structure. That's what I'm talking about. Now we already marked it, but we are going to our small time frame. So let's go to M15. So the one that I'm preferring mainly is M15, guys. It's really going to be so easy for you to use M15. So now what you're going to be doing is you're going to be finding and taking your entries around this point. You understand that? You're going to be looking for more opportunities in the market in small time frames like M15. So now let me give you one simple example of what I'm talking about. Let me show you something. So that was a brief example of BMS. But the most important thing that I always advise you is use mainly small time frames. Use mainly small time frames, because if you use small time frames, you minimize your stop loss. Remember, these things are very accurate in small time frames. If you use this market structure, that's why I want you to master this type of structure. Then this type of structure, what it means, and then you also master this type of structure. Then you also master what this type of structure means in the markets. They all have a different meaning. You get that? Because it's all the behaviors of the dealer that is causing all this. You get that? Now, if you come to small time frames like M15, these things are really so many, and you can be able to scalp something like 40 to 30 pips with only a risk of something like 10 pips, 3 pips, 4 pips, 5 pips. You get that? Okay, it's if you're not patient in the market, you can use that. It can really help you in the market. So that was a brief example of a BMS where you can find yourself entry positions, key entry positions after a breakout, key entry positions. You understand that? So when I talk of SMS is just like a trend shift market structure. Let's say you're in M15 and price starts to move this way. It's just a following of a trend, because it's just shifting markets. This is SMS, SMS. So where SMS is being broken becomes a BMS. So SMS is just like you shift market structure, keep on shifting market structure. And this thing really works in small time frames like M15, also high time frames. Let me tell you one thing. If you're able to master the structure of the if you're able to understand the market structure in any time frame that you're in, then it becomes very easy for you to trade the forex market. You understand that? So what I'm saying is that before you trade, make sure you look at first structures that I've been telling you about. Structures like SMC and I'm gonna be telling you one thing, of course, that I want you to understand mainly. So if you go to small time frames, let's go to USD card. If you go to small time frames like USD card, this is USD card. Let me try to zoom it out, I want you to pay attention to something very, very, very keen, very, very keen, like the candles in the market, Now, let me show you one simple. Yeah, we have been selling SD card for some time, but these structures are just a point of pullback that can help you. So if you come to a line chart, you can really see this. It's really very open in the market. It's really very open in the market. You understand? But I mainly consider this. This structure. Why? Because we had a double bottom here, a double bottom here, and then a structure is being broken from here, from there. Okay, you get that. That's why I mainly consider this type. So if you come to the charts, you can really see very well, very, very well. This is the type of structure that I've been identifying as this. You understand that? It's this type of structure. So you have to understand why this type of structure is being formed. This is a point over this where a BMS is, break of market structure. Now, if you enter the market, let's say you enter your market from here, you enter your market from here. Let's say enter your market from here after this big candle either has been broken, the structure of the market has already been broken. Of course, you don't expect price to break this previous low. You understand that? Because you're entering your market from, let's say your entry position is here. After this, a candle closes above this. Of course, you're not expecting, if price comes back and closes below this, then of course you're out of the market because your structure has already been broken. You understand that? So it can really, this thing can really work if you're not patient in the market, then it can really work for you as long as you have good big money, even small money, not big money, and you're able to spot this structure that I've talked to you about. It can really, really, and really work for you. Mainly in M15, that can really work for you guys. So what else you can see? This was the one we spoke about. Okay. So the structures, let me try to draw for you the structures that I want you to master. You can even have a nice structure like that I've been talking about. Then you can be able to have this. Then you can be able to have where the first one is shorter and the second one is longer. You can be able to have structures like that. You can be able to have structures like this. You can be able to have structures like this. So you have to master all of them and be able to use them. If this video was helpful to you guys, leave a comment. What do you think about this video? And leave a like. Don't forget to join my Telegram group. Check my bio and join my Telegram group. Don't forget this video is sponsored by, of course, Xness, one of the leading brokers. Of course, click that link and open yourself a trading account. If you need more of my help, check my description and you can WhatsApp me. I wish you all the best, guys. Stay tuned for more videos. Don't forget to hit that bell so that you don't miss most of my videos. I'm going to end this, and next time I'll be dropping another video. See you next time, guys. Bye.